Hi everyone, welcome to BlockSnack, your daily crypto wrap-up for Wednesday, May 27th, 2026. We break down Bitcoin, Ethereum, and blockchain news, fast, clear, and without the hype. I'm Jack, and I'll walk you through what matters today. If that sounds useful, hit subscribe and follow the channel.
BlockSnack.
In this video, we explore 6 key developments: the shift from Bitcoin to stablecoins, Banca Sella's crypto services, Ethereum's evolving role, Visa's XRP growth, DeFi's risk challenges, and SoFi's stablecoin launch. And just as always, a quick disclaimer. This content is for informational and educational purposes only and should not be considered financial advice. Always do your own research. Now with that out of the way, let's jump right in. Recent trends indicate that traders are increasingly favoring dollar-pegged stablecoins like USDT and USDC over Bitcoin. This shift is driven by the expectation of prolonged, high US interest rates, making dollar-linked assets more appealing due to their yield potential. As a result, Bitcoin's dominance in the total crypto market value has slightly dipped from 61.20% to 60%, while Tether's USDT and Circle's USDC have seen marginal increases in their market presence. This pattern mirrors similar movements earlier in the year, which preceded a notable Bitcoin price drop to $63,000. Additionally, Bitcoin ETFs have experienced significant outflows, totaling $2.59 billion, as investors pivot towards gold and other precious metals. Analyst Alex Kupczkiewicz suggests this trend may indicate early profit-taking and risk aversion ahead of the summer season. Moving on to regulatory advancements, Banca Sella has become the first Italian bank licensed to provide cryptocurrency services under the EU's Markets in Crypto Assets Regulation, MiCA. This new authorization allows the bank to offer custody and transfer services for digital assets, targeting corporate and institutional clients. Unlike non-bank entities, Banca Sella can enter the crypto space through a simplified notification process with national regulators. The bank's initial services will focus on custody, receipt, and transfer, excluding trading activities. Banca Sella's involvement in the Bank of Italy's fintech Milano hub and its partnership with Fireblocks for crypto custody underscore its commitment to blockchain technology. The bank is also a founding member of the Kavalis Consortium, aiming to launch a euro-denominated stablecoin in the second half of 2026. Now for Ethereum's changing landscape. David Hoffman, co-founder of Bankless, has sold all his ETH holdings, signaling a significant shift from his previous advocacy for Ethereum. While Hoffman remains optimistic about Ethereum's network, he believes the ETH is money thesis has reached its peak. Ethereum's design now seems to favor applications and roll-ups over ETH's monetary premium. The network's success in expanding tokenized dollars from $3 billion in 2020 to $163 billion in 2026 highlights this shift. Hoffman argues that Ethereum's architectural choice to maximize utility has led to value leakage towards Layer 2s and applications, rather than enhancing ETH's value as a monetary asset. His decision reflects a matured thesis rather than a lack of confidence in Ethereum's future. Next, we examine Visa's significant developments in blockchain payments involving XRP. Visa has reported substantial growth in blockchain-based payment activity, particularly with the stablecoin RLUSD on the XRP ledger. RLUSD has surpassed $1 billion in monthly transaction volume, reflecting genuine institutional demand. Visa's platform supports stablecoin transactions across various networks, contributing to a multi-trillion-dollar monthly stablecoin payment market. This growth aligns with the recent US regulatory clarity, potentially accelerating institutional involvement in digital asset payments. Visa has been exploring blockchain payment technology for years and continues to integrate stablecoin settlement systems into its global network. Moving on to DeFi, platforms like Aave have grown to accumulate deposits comparable to traditional banks. However, the global corporate loan market, valued at approximately $2.9 trillion, highlights the risk management challenges DeFi still faces. Despite significant growth, DeFi protocols struggle with pricing credit risk and managing large-scale corporate lending. This gap underscores the limitations of current DeFi risk models when compared to traditional financial institutions. The analysis suggests that while DeFi's asset growth is impressive, it does not yet equate to the ability to handle complex credit exposures inherent in large corporate loans. Finally, let's explore SoFi's latest innovation. SoFi Technologies has launched its US dollar-pegged stablecoin, SoFi USD, available to its 14.7 members. This stablecoin operates on Ethereum and Solana blockchains, allowing users to integrate blockchain speed with traditional banking trust. SoFi USD aims to bridge the gap between digital and traditional finance, offering features like tokenized deposits with FDIC insurance and cross-border transfers. The stablecoin is a fully reserved digital dollar, designed for 24/7 settlement, and will also be integrated into MasterCard's global payments network. This launch represents a significant step in merging blockchain technology with regulated banking services. That's it for today. Subscribe for daily crypto news, drop a like if this helped, and share it to support the channel. See you tomorrow for your next BlockSnack.